All right, welcome out to today's advisory report. Our gauges have flipped the short term back to bullish. We mentioned yesterday that we were going to be waiting to see how price acted a second day below the 20-day moving average, and that second day did not happen. Yesterday's close at the dead low was very suspicious. Today, the market opened mid-range to yesterday's data and held the 20-day moving average. So we are back to bullish. We're going to leave the market condition uncertain just to see how this plays out for a few more days, but a positive day here in the markets. We have kept our exposure the same as yesterday also. Pretty much max target offense except for the ultra aggressive because we got hit by a couple stops. We're a little bit lower there. Some of the bleeding has at least stopped temporarily. Let's go on over to the chart, check out the intermediate trend and the short-term trend fared. Here we are at the intermediate trend. We can see that we are above the 30-week moving average. That's our common theme, leaning bullish, because we know when price is above the 30-week, there's a 56.7% win rate, meaning that when price is above the 30-week, they are 56% of the days are up days. However, when the market or the SP 500 is below the 30-week, only 45% of those days are actually winning days. And so that's why we want to be bearish below and offensive above. Let's go ahead and take a look at the short-term chart really quick. Here we have the SP 500, and looking at that beautiful move up, it was a lot of strength, hit some resistance, and now we've kind of fallen back, but still above the 20-day, a smidge, and also above this other line of resistance that we're hoping becomes support for the market. We'll see how that works out, but that's what we got as far as our levels. So you can't really complain, even though this pullback was a little rough and the AI stocks that moved forward here got sold off here. We'll see if this is a turn up and ready to regain strength. Let's go ahead and take look at some of the positions that we have over here in the ultra aggressive account. Taking a look at HPE, a positive day today. Maybe this had found the bottom. I'm going to curl back up, so we're holding on to those shares. Let's take a look at CrowdStrike. Really disappointing action on CrowdStrike, but possible hammer candle, maybe looking like a similar candle right here, where we ended up having price turn back up and launch after a pretty unimpressive or disappointing pullback here also. So let's see how that kind of pans out. We're still holding on to those shares. MU negative on the day after being a positive, but still forming what looks like a nice formation. Some resistance right here in this area. We're looking at maybe this is going to be a little bit deeper pullback. We'll see if that wants to pull back and turn back up. This is a pretty nice move from the bottom to the top. The washout on that Wednesday, $739 all the way up to $1,000. So you got to look at like a 40% gain off the bottom. It's entitled to be able to rest. WDC looks like it's kind of forming a similar formation. Very, very choppy in here, but possibly the bottom's in and now we're curling back up. So we're holding on to these shares. Holding on to stocks like this has created a bunch of volatility in the ultra aggressive. That's what our expectation is. So with that understanding, we are holding through it. That's what I got for today. Take care. Have a wonderful afternoon. We'll be right back at it tomorrow.